Good morning, everyone, and welcome to Weekly Profit Talk. This week, our topic is going to be running your practices scenarios before you prescribe. Now, as you might imagine, when you are doing your own differential diagnoses, um, you basically ask questions, run a differential, you consider the history, as it were, and you figure out all of the variables before you actually prescribe something. So, are you basically doing yourself the courtesy of giving yourself that same service in your own business when you make major capital decisions, such as hiring or buying something? Let's talk about that a little bit. So, I'm going to go ahead and do appreciate your patience here. The decisions you've been making. Let's think about the last big call that you made for your practice itself, okay? Um, Hiring a new provider or buying that X-ray machine. Maybe it's time that you stop giving all your money to a lessor and own your building instead of leasing it. Did you sit down and run the numbers through scenario-based modeling, or did you just glance at the current numbers that you have, take a quick look at your bank account, and hope that it's going to work out? Last year's numbers are history. They cannot tell you what happens next. Most practice owners do decide these things the way an anxious intern might prescribe, pattern matching from memory, hoping this case is going to resemble the last one. So, your practice deserves better than a hunch wearing a confident face. And let's get into that just a little bit more. Scenario forecasting. What it actually is a financial version of a differential diagnosis. It's not one spreadsheet with a tiny answer. Um, it is three or four plausible futures laid side by side so that you can compare, with the cash and profit consequences of each of your decisions made visible before you actually make commitments. What does each of these roads to your payroll, to your distributions? What about tax liabilities and the balance in your operating account in the near future? This is where the scenario-based forecasting for both cash flow as well as profit and loss come into high value for you. Run the scenarios, and the decision stops being a leap of faith. It becomes what every clinical decision already is for you, which is a reasoned choice among known probabilities. Here's a case study example for you. Say that you're weighing whether to add a second psychiatrist to your practice. And let's just say, for example, that's what you do. Without a forecast, the question is, can I afford another provider? It's a yes or no question, and you answer it with your stomach, right? With a forecast, the question gets sharper and far less frightening. You can see that, for example, at a 60% fill rate by month four, the hire turns cash flow neutral by month seven and starts adding to profit by month 10. The hire did not get less risky. You simply stopped making the decision without having the information first. Looking through the windshield, not the rear view. Forward looking is always going to be better. You don't have to turn your neck and give yourself bad muscle back there. So, this is the difference between an accountant who reports on your past and an advisor who helps you steer toward your future. Let me touch on that. An accountant, in the context that I'm using here, you've probably got one or two separate services, or maybe one person is doing the same thing for you, and that is keeping a set of books for you, uh, categorizing your transactions, turning that into a clean set of books to either do taxes from themselves or to turn over to a tax accountant once a year. By the time a tax preparer gets a look at this, the year's gone and you're already well into the following year. The information's not going to do you much good anymore, other than anecdotally. It's basically a history lesson, as we've said earlier. So, one hands you a summary of what's already happened, the accountant. The other, your advisor, sits in the passenger seat, guiding you, asks you what you're about to do, and shows you where each road most likely leads. You spend your career helping patients see around corners they're unable to, so you deserve someone doing the exact same thing for you. The good news is that the first scenario is actually the easiest to run. It's nothing more than a conversation about the decision currently keeping you up at night and what those numbers actually have to say about it. So, let me let you know, as I do every week, that we're coming to you live, or you may be watching this on replay on one of three media. You may be on YouTube, LinkedIn, or Facebook. And the thing those all three have in common is a comments capability. If you would please go down to that comment and say help, more info, free call, because the first call with me, and you'll be talking with me personally, is absolutely free. It's what we call discovery. And we just kind of discover things about each other. I'll ask you some questions, and you'll get the chance to ask me some too, and we'll figure out if it resonates to work together. Would you be interested in having a free conversation to find out if a guide in your fiscal future could save you and also earn you and help you keep tens of thousands of dollars in additional money in your practice? The only thing it would cost you is time to find out, and I'd love to have the opportunity to talk. So I was going to say chat. I'm sorry. So let's do that soon. If you pop something in there like help or need more info or just be amusing, say something funny, we'll get to you within 24 hours. Let's say 24 business hours. Some days we might not see it. Okay. But we'll get back to you. We'll let you know how to book that call, and let's have that conversation too. So until next week, have an amazing rest of your Wednesday, an awesome rest of the week. And if you have a chance today, do something randomly kind for a stranger. So until next week, this is Weekly Profit Talk.